International markets, again, I mentioned this a little bit earlier. If you look at, again, US is 17.9, that's the S&P 500 return, but look at the rest of the world. So this is ACWI, is the all country world index. So basically the rest of the world versus the US. So if you look at the US denominated return, it's about 33% as opposed to 18. Everyone played, except for India, everyone did really well this year in 2025. Some of which are driven by the fact that dollar weakened throughout the year. And if you look at this, for example, in Eurozone, this purple portion of that return, that's 41.3% that we were able to get from Eurozone this year. A healthy amount of that is driven by the fact that Euro strengthened against the dollar. We do expect further dollar weakening. A lot of people expect further dollar weakening in 2026, which is likely to, again, help the international market. So we are a strong believer in continued diversification in international markets. We think there's still money to be made in international markets as the dollar continues to weaken. Much of that dollar weakening expectation is driven by trade relationships, geopolitical risk management, meaning a lot of countries sort of reset their expectations or their relationship with the US and started diversifying their trade relationships with others. A good example of that is Canada, for example. So if about a couple of weeks ago, a Canadian prime minister gave a speech on how it's time to reset our relationship with the US and look further and beyond. And this kind of sentiment is kind of carrying internationally, and we think that means further weakening of the dollar before it's strengthening again. So we like the international markets. We're going to be more invested. So we've actually made adjustments to have more of our allocation on international markets.